Hoki mai anō and welcome back. This is the AM show on Toru 3 Magic Talk and online. It is just gone now 5 away from 7. This week is World Investor Week and it seems more and more everyday Kiwis are keen to get involved in trading shares. So where do we start? How do we avoid the pitfalls? Joining us now is the Financial Markets Authority's Gillian Boys. Gillian, good morning.
Good morning, Ryan. How are you?
Very well, thank you. A lot of people jumping into Sharesies and the likes because of FOMO, fear of missing out. They see their friends doing it and they want to get involved. This is a good thing, no?
Yeah, look, we're really encouraged. We haven't seen a generation of investors like this for many, many years. So this is fantastic news. And we've done some research with investors and they're mostly doing the right thing, which is really great. But yeah, FOMO is a little bit of an issue. And so that's what we wanted to focus on this year in World Investor Week. Right,
because you start to make irrational decisions when you're basically investing out of fear of missing out.
Yeah, that's right. If you haven't done your homework, then you might make a mistake and do something that's not in your best interest. So really important just to think through and do your research and take on board some of the tips that we're pushing for World Investor Week.
Where's a good place to do research?
Okay, so lots of different places, but we're a regulator, so we look after the regulated disclosure information. So if you were buying shares, you'd want to look at company annual reports and some of the information that's on the NZX. If you were buying managed funds, you'd be looking at things like product disclosure documents. But what we see people doing actually is looking on social media platforms or asking their friends. So it's a good place to start, but make sure you look at the proper company information as well.
Yeah, everyone just basically WhatsApp messages each other saying, buy this share, buy that share. That's how it works.
Yeah, a little bit, yeah.
What about expectations? Because you know what, millennials, and I can say this because I'm a millennial, we want everything yesterday. We've got an app on our phone that tells us how much more money we've got in our Sharesies account, etc. It's all happening now, and we want the money now. Can you give a realistic expectation for people? Potentially some who are saving for their home deposit as well and using Sharesies and the like to get there. Is the stock market a get-rich-quick scheme or is it a long-term game?
No, look, when I set my son up on a platform, I said his password is get rich slow because actually this is how it works. The bad news is it's probably going to be 10 years plus. That's when you'd expect your returns from shares to even out. In the shorter term, they're going to go up and down over time. But one of our tips for the week is don't freak out because actually that's just normal.
Yeah, good advice. Is that still your son's password?
No, he changed it. I wanted to watch what was going on and he changed it, the little sod.
Brilliant. How old is your son? Is he on Sharesies platform? Well, what age should we get people doing it?
Oh, look, start as young as you can because another one of our tips is, drip feed over time. And actually, the sooner you get started on these things, the more your interest can compound. So, really staggering differences if you start really early. A lot of these platforms have kids' accounts, so you can set them up. With our kids, we've set them all up when they've turned 18. That's been their 18th birthday gift, has been an online trading account. So, they're all taking slightly different approaches to it, and it's really interesting to watch.
Yeah, fascinating. Thank you so much for joining us this morning. That is Gillian Boys, who's the Manager Investor Capability at the Financial Markets Authority, with some advice, some tips on investing. It's a long-term game, but start early. In fact, if you can eat, you can invest, right?